We've got record high yields in the fields for grain, corn, and beans. Soybean meal is soft, and could this be the best year yet ahead for dairy farmers? Let's find out right here today on the Uplevel Dairy Podcast. This is the Uplevel Dairy Podcast for dairy farm owners, managers, and advisors who are committed to profitability, sustainability, and excellence. I'm your host, Peggy, and it's my mission to bring you the conversations that will uplevel your skill set and your mindset so you can be a top performer in the dairy farming business. And to do that today, I am bringing you the August HighGround Dairy Monthly Market Update. This is brought to you by HighGround Dairy, which provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. And this information in this podcast is for educational purposes and is not a solicitation to buy or sell commodities. Opinions expressed are current opinions as of August 19th at 4 p.m. Central Standard Time and only represent the views of the speaker and not those of HighGround Dairy Trading unless otherwise expressly noted. Now join me along with Curtis Bosma for this August monthly market update from HighGround Dairy. Curtis, you're back with us for the monthly market update from HighGround Dairy. Give us the report for August.
Yeah, so looking at this month, some big highlights to first look at on the grain side of the equation here. So last week we had our World Agricultural Supply and Demand Estimates, or the WASDE report. Looking at new crop corn, there were some adjustments made to the balance sheet. So production was actually increased by 47 million bushels. Most of this due to an increase in the yield expectations. So yields were raised to 183 bushels per acre on the corn side of things. This would be a record yield for the corn crop. This is something that falls within the trend line projections for what the corn yield could be, but this year with all of the heat and all of the precipitation that's been kind of coming across the Midwest, expectations are that this may actually be quite a large crop. USDA also made some changes to the demand side of the equation for the corn crop here by increasing some of the demand figures, mostly on the export side of things. That actually outpaced it, so they added 60 million bushels of usage, which actually brought the ending stocks number down slightly by 24 million bushels, but we still have some massive ending stocks out there for being projected for this new crop corn, which is going to keep a lid on prices kind of moving forward here a little bit. The more exciting side of last week's WASDE report was actually on the beans. So looking at soybeans, USDA not only raised yields to 53.2 bushels per acre, but they also found another million acres to add to the balance sheet. So that increased production by 154 million bushels, which was rather significant. To kind of soften the blow, they did add some additional usage there, adding in a total of 29 million bushels, most of that again on the export side of things. But that still brings up our ending stocks number for soybeans on new crop up 125 million bushels. So that was a big shift in the overall production and ending stocks of soybeans here from that WASDE report. We saw a lot of downward pressure following that report in soybeans and specifically soybean meal as well. So soybean meal futures fell to a 4-year low, just below $300 a ton last week, Wednesday. This is definitely music to the ears of dairy farmers as they're looking at the protein side of their rations, pricing out what these next couple of months are going to look like here. This week, kind of looking ahead at some news and some highlights that we're going to be seeing, I'm sure, popping up on social media. We have the Pro Farmer Crop Tour. So starting today in both the east side and west side of the Corn Belt, there are teams that have been deployed that are looking at all the crops out there and gathering some estimates for people to look at there. They're working their way towards the middle a little bit. So I've been reminding people that some of the stuff we see today and tomorrow may not be the best acres to look at. But by the end of this week, once they get into Western Illinois and central Iowa and such, we should start to see some of those acres that are potentially showing some record crops there.
Curtis, let's talk dairy markets.
Yeah, so we've had quite a bit of excitement here in the dairy markets. Before looking at specifically just pricing things, one thing I do want to point out is we've had some time now to look through some of the stuff from USDA, but on the 15th of July, USDA released the recommended decision on amendments to the federal milk marketing orders. This is something that's been published that we've sent out a fair amount of resources on. So we definitely recommend any producer that's in a federal milk marketing order to kind of look through these things, reach out with any questions. There are some implementation lags. There's nothing that's going to necessarily affect pricing here in the next couple of months or anything like that. But it's something that we want to make sure everyone is aware of.
So Curtis, you just mentioned the federal milk marketing order pricing formulation updates that your team has done a lot of research on that topic. And in fact, I know Alex from your team, who has been a guest here on our Young Leaders series, that's an area that she's particularly passionate about. And so for producers that want to get their hands on those resources, where can they find that information?
Yeah, so in the monthly market update that'll be linked in the show notes, we have a page in there about the FMMO recommended decision. It kind of has a summary of everything that we're looking at there, as well as a link to a white paper that Alex published with all of the breakdown of every formula change that's going to be in there.
Excellent. Well, thank you to Alex for all the work that she put into creating a resource for dairy farmers to better understand this topic. And there'll be that link in the show notes so that you can get access to those white papers and to that information and have it right at your fingertips. And back to the markets, Curtis.
Yeah, so looking at the markets, last week our insights team had the very, very difficult task of publishing a forecast at the end of the week. And after a very volatile week at the CME spot market, that is much, much easier said than done. What we can say is, just looking at these markets individually, we've seen a swift jump up in the cheese markets here, specifically talking about CME spot barrel cheddar. So we moved to a 2-year high. We're currently sitting at $2.25 a pound there. A lot of this is just due to tight milk supplies that are seasonally being seen across the U.S. Of course, there's contributing factors to this, like a smaller U.S. milking herd, tight replacement inventories. All these sorts of things have been coming together. But we've also seen an extension of some of these limited time fast food sort of restaurant $5 meal deals that are being offered. And that puts some demand into that sort of commodity style barrel cheddar as well. We also currently, this time of year, we start to see milk shifting towards class 1 as kids are going back to school and such. And you have football season right around the corner, so pizza demand starts to kind of pull in there as well. So all of these things in a vacuum kind of happening at the same time have created this strong pull on that CME spot barrel cheddar, which has brought us to these lofty levels. Now, with that kind of pressure on the market, we've seen class 3 futures, specifically from September to January of 2025, move to contract highs over the past week. So some $22 milk is on the board. Always exciting to see that. And it's definitely something we're monitoring very closely here. Looking over at the butter side of the market, I know we talked about it last month a little bit, but butter has been the most orderly rally that we have seen in quite a while. So it's continued its march higher. But as we've been watching it now through the last 2 weeks or so, we've seen a lot of offer volume showing up at the CME. So we've been seeing a lot more of trading activity there. Last week alone, we had 103 loads of butter trade at the CME spot market. I believe Thursday was just over 50 loads, and that was the highest since 2004. So pretty significant there. Inventories are still relatively healthy on the butter side of things. However, when you look at consumer trends, consumers, you can't really substitute butter anymore for other oils or fats. So it's become sort of this inelastic demand product where, regardless of price point, consumers still seem to be turning towards butter, which is great. And I think the end users are just making sure that they have what they need, and nobody wants to get caught short having to buy butter up to some super high price levels come October. We saw it last year where there was a big run on butter going up towards like $3.50 a pound. So $3.50 is greater than $3.15 where we are right now. So buyers are kind of comfortably stepping in and making sure they have enough to get themselves covered there. Looking over at milk powder, specifically non-fat dry milk and skim milk powder, a little bit less exciting there. We've seen some activity with people being able to export small amounts, but overall the big export stories that we've seen over the last couple of years that really can turn markets have been relatively quiet. We haven't really seen much out of China in recent years. I think looking at their domestic production and their ability to kind of shore some of those things up, a lot of the global players that have been able to play into that market space have really struggled to stay in that a little bit. So a lot less excitement on the milk powder side of things there, unfortunately. This week also marks the first week we're going to start to see some of the data from July. So we're going to have a milk production report and a cold storage report this week. So if we recall, we've now through June had 12 reported months of year-over-year declines in milk production in the U.S. So we will see if that trend continues here. Overall, looking at, we talked about grain markets, we talked about dairy markets, but as we plug all these numbers together and as we're having conversations with producers, the margins over the next couple months, next couple of quarters, they look quite spectacular. We're always encouraging producers. I know we talked about this a little bit last month of sharpening the pencil, making sure we understand from a margin perspective where we are at, how can we measure those things. I think it goes without saying that looking at the fourth quarter of this year and even into the first half of next year, that you don't have to have a very sharp pencil to see that these are going to be very good numbers to work with from an overall profitability perspective.
We talk about margins a lot, and you just brought it up again. So even in the best of times, how important is it still to have a pulse on margins and maximizing profitability, not just accepting that you might get to enjoy it because it's the position of the markets, but actually managing and maximizing that?
I think it's important. I always like to break it down. If you kind of dissect an income statement that you see from your accountant or something like that, any income statement is essentially just telling you a business's ability to create profits against all the revenue received and all the cost outlays that it has. And if we look at the individual items that fall onto any dairy's income statement, the number one thing, milk revenue, it stands out. So understanding all the things that go into that milk revenue. Obviously, I think dairymen, nutritionists, everybody in this industry could talk circles around me about efficiency, how to get the most milk out of the least amount of cows and all those things that go into that. But ultimately, that's only half the equation when it comes to revenue. The other side is understanding the milk price, understanding how that whole system works. And I'll be the first to admit it's complex. Understanding milk pricing is definitely not a simple thing, but it's something that we have quite a few resources here at HighGround. Obviously, we talked about the Federal Milk Marketing Order updates and different things we have there. But this is something that we're passionate about because in order to really understand that largest item on every dairy farmer's income statement, you really need to understand the dynamics that go into not only that price discovery process for how are we figuring out what these milk prices are going to be, but also the tools we can use to transfer the risk of fluctuations of those things onto other things. Also, I guess going down the income statement a little bit, our biggest cost center is feed costs. So I think nutritionists do an excellent job of making sure that we're managing that appropriately, making sure that we understand what's going in the ration, what can produce the best feed efficiency, what's the most cost effective. I'm sure there's 100 different ways that you can formulate something like that. But ultimately, we also need to understand, okay, how are those prices coming to be? Because certain commodities that go into what we feed dairy cows are correlated to futures markets. They're influenced by these trends. We talk about things like the corn yield. We talk about things like the ending stocks of soybeans and exports and all these things. All of those things are impacting a different section of a dairy's income statement. And we need to be able to understand that, be able to dissect that, and then figure out the appropriate tools that may need to be used in order to mitigate some of that risk as well.
And Curtis, as we have this conversation, it reminds me of a couple of guests that we've had on the podcast recently. One of them just a couple episodes back when I had Mike and Ben Jones at Trillium Hill Dairy on. And one of the things that they talked about when they really look at the future of their business is managing that margin. I would say it was kind of a theme of a lot of things that they talked about in positioning themselves for greater profitability and sustainability as a business is what are those little levers that they can pull? Where can they gain that extra 1%? Because it's easy to make up that gap between, say, a 10% improvement in some area, but the better you get, it's capturing those smaller percentages, right? That are the difference from getting from good to great. And that's what they were talking about, was just being able to grab on to those margins and just really increase the management and the intensity and capitalize on that as a way to position themselves for the future. Did you catch that episode too?
I did, yeah. And I would say, Peggy, whenever you're looking at the sample size of the producers that you're talking to, particularly ones that you have on the podcast as well, you're talking to some of the most efficient, high-performing producers that are out there. And so for me, it's always fascinating to hear what they're working on, because they are the ones that are on that kind of cutting edge a little bit. From a numbers standpoint, to kind of answer your question a little bit there, is I always think of it in terms of variance, of what can change, and going back to the income statement, what can disrupt the numbers that are on there that ultimately feed to that bottom line. And I think for a dairy that maybe doesn't have the systems in place, or maybe has some management gaps, definitely no one that's been on your podcast, because you seem to find the best of the best to be guests on here. But from those sorts of things, there's maybe some big swings in how different things are handled on the dairy that can be solved, essentially. Whether it's something to do with their feeding, their breeding, or different kind of systems or programs that are taking place on the dairy. Now, once you get further and further and you start to solve the big problems, and we start getting into the nitty gritty, 1%, 0.5%, very small incremental gains that can be made from KPI perspective, it gets harder and harder to measure things and know that what we're doing and the efforts we're putting into things are actually putting us in a positive position. So I like to look at things and, okay, so we talked about milk revenue a little bit, of how it's kind of a combination of not only the efficiency and the ability to make milk, but also the price of milk. And if we look at the last 10 years, the annualized volatility of the U.S. all milk price is right around 20%. So that means every year the milk price could be 20% higher, 20% lower. So I always like to challenge dairies and say, hey, if there's another metric on your dairy that if it had a 20% variance year to year, that would scare you a lot. Well, then maybe we're focusing on the wrong metrics. Maybe we need to be focusing on the bigger picture items around the milk price a little bit, because if we're trying to eke out a 0.5% gain on something that's going to tie up lots of resources and time, and we're not focusing on the big volatile items that are potentially going to really hurt us from a financial perspective, then we may be a little off track here.
And Curtis, you work with producers all over the country, but you are based out of California. So bring a little perspective to some of our producers that listen to this podcast that are in other regions of the country. And what are you seeing? What are some of the conversations that are coming up with producers that are in your neck of the woods, as far as the challenges that they're facing or ways that they might be looking to diversify their businesses?
So California is a little bit of a different beast in terms of dairy, I would say. And a lot of that has to do with, one, we could go on for hours about water rights, water limitations and regulations and different things that go into that. But also, too, this is some of the most fertile farm ground in the world, where you can grow just about anything you want. So the versatility of what crops you can grow and produce something out of is kind of endless here. And with that creates a lot of competition for ground, particularly ground that has good water on it as well. So it's kind of, we got to this point now, it seems, that in the California dairy industry, where if you want to grow or build into a dairy, you have to make sure that you have the land with water to produce forage, because forage crops like corn silage and such, they are not as competitive on their own versus other crops, let's say tomatoes, or more permanent plantings, even like pistachios or almonds or things like that. So there's a lot more competition in that, which kind of creates some barriers to entry as well. Because if you want to come into California, you have to be able to not only establish the land base to build the dairy farm and meet all the environmental regulations for that, but also establish the land base for all the forage needs for the dairy as well. Whereas if you go to the upper Midwest, it's a little bit of a different story, where you have a lot less versatility of what can be grown. You can drive around Wisconsin and Indiana for quite a long time and see nothing but corn and beans. So there's a lot less variability there. And I would say, from a financial perspective, dealing with people in California, I grew up in this community, so I feel like I understand the dynamics of it quite well. But I always say California dairy farmers are first and foremost real estate investors that just so happen to milk cows, Whereas when you go to the upper Midwest, you run into far more dairy farms where it's people that are the dairy farm itself, and the cash flow and the profits from that tends to be what the family makes a living on. It's not just real estate appreciation living in a state like California. So it's a little bit of a different business model, like in a sense, for how things get treated or structured because of that.
That makes a lot of sense, just that difference in the outlook on the business structure and how that all comes together. And you're in California, but you talk to producers in the Midwest too, and in other regions of the country. You're kind of that guy that everybody knows everywhere, right? So do you hear and see more producers that were maybe traditionally, like you said, here in the Midwest, really focused on the dairy farming aspect as that being the core business? Do you see them starting to have an interest in diversifying what they're doing and how their business is set up to maybe include non-farm real estate or something else?
Those conversations certainly come up. I won't claim to be a professional investment advisor when it comes to real estate, nor am I their accountant to tell them from a tax strategy standpoint where the best place to place their money is. But I have seen a lot of clients find a lot of success with investing in other things like multifamily apartment buildings and things like that. And that's something that I think is great to be able to solidify that foundation a little bit. I think one of the things I talk about a lot with dairies is the goal isn't for us to achieve this maximum efficiency, which it seems that everyone is chasing after. The goal is really to create, from a total portfolio standpoint, how can we set up our business to be the most resilient? And when times are good, is there things that we can invest in to be more resilient, whether that's financial risk management on the existing dairy operation, or whether that's diversifying into a different asset class like commercial real estate or something that isn't going to be correlated to all of the volatility that we're talking about in these commodity markets. So that's something that the more durability, the more resilience that we create with our personal portfolios, that is something that stands the test of time, and you see a lot of people build a lot of success by putting those pieces together, essentially.
Curtis, thanks for jumping on with us today for this August monthly market report from HighGround Dairy. Is there anything else you wanted to add to the report this month?
Right now, we're in this exciting window of time where margins are looking good. I know producers may have only received one or two milk checks that really feel like that, but we could see it on the horizon. There's definitely some good numbers coming at us here. And it's an exciting time to be in the industry. And I definitely think as we're looking at this, I'm just encouraging producers to be mindful about what we do from a business standpoint to make sure we're focusing on that resiliency, even in times where it seems that we're invincible.
Well, thank you so much for those words of wisdom. And of course, as always, we'll have links in our show notes for the details regarding this update, as well as some of those notes and white papers with the FMMO recommendations that Alex has put together for you as well. So make sure you head up that link in the show notes to find these resources from HighGround Dairy. And Curtis, thank you so much for jumping on with us for this monthly market report.
Thank you, Peggy.
You just listened to the monthly market update from HighGround Dairy with Curtis Bosma. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Make sure you find the link in our show notes for more resources and to get in touch with Curtis and others at the HighGround Dairy team. I'm Peggy Coffeen, and thank you for listening to the Uplevel Dairy Podcast.